Well, it's time for our panel, and let's bring in Janet Alvarez, executive editor at WiseBread, and Matt Schulz, chief credit analyst at LendingTree. Glad to have you both on because I want to talk about the payment space. So key here, of course, after the bell today, PayPal releases the quarterly numbers. So Janet, I'll start with you. What are your thoughts on what we should expect from PayPal?
I think generally the consensus view is that PayPal is expected to beat expectations, driven in large part by recent acquisitions, such as the acquisition of Honey, Venmo the past year, and of course, increasing transaction volumes in January, which were reflected in MasterCard's earnings last week. Finally, I think that the ability to trade Bitcoin and other cryptocurrency on PayPal has really driven even more transaction volume. And of course, PayPal earns per transaction, so that can only be accretive to their earnings.
How much, Janet, before I get to Matt, I mean, you mentioned the crypto part, which I think is very interesting. It's a newer fascination, a newer play. How much of the bottom line could really come from that? Because as you said, you know, they get money as people are searching that. I mean, could that be a really big part of their numbers going forward in the next few years?
Well, it's difficult to say, and that's one thing that analysts will be looking at really closely on February 11th when PayPal will be having an analyst day. They'll be looking for projections of that sort over the medium to longer term. What can be said, however, is that PayPal's crypto trading platform has tremendous ease of use. It sort of democratizes crypto trading, takes the mystery out of it. So if anyone is poised to win in this environment, I think PayPal is really well positioned.
Right, right. Matt, what are your thoughts? Obviously, the economic recovery is underway. We have vaccines happening. We just talked about the transaction volume, at least was good news. We saw a rise there. What are your thoughts and your estimation here for a name like PayPal?
Yeah, absolutely. A lot of card issuers, a lot of financial companies reported really good quarters and are faring an awful lot better than we might have expected them to a year ago when all this began. And with the potential of a third government stimulus check, the issuer outlook is only getting better. And really now it seems like there's this giant explosion of pent-up demand just waiting to be unleashed once this pandemic is behind us, that PayPal and card issuers and other lenders can take advantage of. Now it's just a matter of getting there and seeing when that'll happen.
Right. Yeah, I think you make a great point. Janet, you know, he talks about some of the other names, right, as Matt is talking about some of the other issuers giving some good numbers so far. Which ones do you watch most closely to understand the space overall? I mean, Square is another name that we watch, MasterCard. We've already gotten some numbers in. Is there something specific that you look at as a pro that maybe we could be missing?
So I do tend to look at PayPal's competitors like Square very closely, and I like to look at the legacy credit cards. So people like American Express in particular give you real insight into where the money is headed, because often the habits of the affluent tend to dictate where the rest of us take our spending habits afterwards. So looking at Amex and looking at some of the more upscale options offered by legacy cards like MasterCard and Visa give us insight into where the economy may be headed. And I agree entirely with Matt that this is also sort of a macroeconomic story in that an improving economy, receding COVID drives more transaction volume. But also, we can't forget government stimulus. So there has been massive government stimulus over the past year, and more is very likely to come in the coming months. And that can only drive more growth in the mobile payment space.
Yeah, the stimulus is such a big part of it. You know, it's a little like the Kool-Aid. We always talk about the Fed and the Kool-Aid, right? And Matt, as we talk about this feeling that some people have the most household income that they ever had as they're just getting all this money, and it just feels like a little bit nervous in certain ways because things are getting better, ideally. But are they? What are you watching most closely? Is it Square and some of the legacy names like MasterCard and American Express?
I'm paying most attention to the legacy names, the Amexes and Chase and places like that. And we've seen signs in earnings calls to this point that and the big legacy players do expect things in the credit card space to get more competitive, and that they expect to ramp up cardholder acquisition in the next little while as they see that things are settling out and they've kind of learned how to live in this new normal, and they feel comfortable pulling back some of those loan reserves. So they're feeling pretty good, but we still haven't gotten across that bridge quite yet.
Right. Final thought, Janet. Any kind of changes that we might see? Any mergers, acquisitions, changes in the way we do payment, peer-to-peer, or anything like that?
Just that I think this is a cost-cutting environment and a cost-cutting story in general. I think that's a theme that hasn't been explored sufficiently. COVID caused a lot of retailers, a lot of mobile payments companies to sort of scale back on their marketing, scale back on a variety of costs. And I think that'll persist. I don't think that's going to go away anytime in the near term. So what you're going to see is that the mobile payment space is going to be generating more revenues in an environment where costs will continue to be substantially lower. And that, I think, is something that could also surprise to the upside.
Yeah. Great to chat with you both. Thank you so much, and great chatting here about PayPal in particular. We're waiting to hear more from that company. Janet Alvarez, Executive Editor at Wisebread, Matt Schulz, Chief Credit Analyst at LendingTree. Thank you both.